Hi, this is Matthew Cratter from Trader University, and today I want to talk about Bitcoin for beginners. If you're interested in Bitcoin, other crypto, momentum stocks, Warren Buffett, or just want to see what I'm trading these days, be sure to hit that subscribe button. So, why should one be interested in Bitcoin? It seems like a very strange new technology. Well, let me give you just some hard numbers. Right now, as I'm recording this, Bitcoin is trading for about $7,000 US dollars per Bitcoin. And if you ever want to find out the price of Bitcoin, you can just go to Google, type in Bitcoin price, and this will come up. So about $7,000 per Bitcoin. Where do I think Bitcoin is going in the coming years? Now, again, everything I'm saying here, none of this is investment advice, but you should know that I own a lot of Bitcoin. So if Bitcoin's currently at about $7,000, where do I think it's going in the coming years? And why is it such an exciting investment opportunity? By the end of 2021, the model, which I'm going to show you, says that each Bitcoin should be worth $100,000. So you invest at $7,000 now, it becomes $100,000, perhaps by the end of 2020, but certainly by the end of 2021, if the model holds. 2024, each Bitcoin at about $400,000 per Bitcoin. 2028, somewhere around $3 million per Bitcoin. So this is a chance to make 100 times your money, 200 times your money, maybe even 300 times your money. It's the best investment that I know of right now. Again, it's risky. This isn't investment advice. If you want to learn more about these price targets, I would refer you to Stefan Livera's podcast here, which I'll link to. A good guy to follow on Twitter is Plan B, and he has an excellent paper on how to model Bitcoin's value based on its scarcity. Now, this is the paper that I use to get those price targets. Now, this all sounds too good to be true, doesn't it? And so the immediate response is when you talk about Bitcoin and you start throwing around crazy numbers like this, is that, oh, Bitcoin is a Ponzi scheme. It's a pyramid scheme. Now, it's none of these simply because it's not a centralized thing. It's not run by a corporation. It's not a Bernie Madoff fund. It's not a multi-level marketing thing where the first people get paid out by later people. But a lot of people just think that Bitcoin is a bubble. Now, the strange thing about this bubble is it's lasted since 2009, since the invention of Bitcoin. And people have been saying that Bitcoin is in a bubble since it was trading at 5 cents, 10 cents, $10, $5,000, etc. A lot of people compare it to the tulip bubble. The difference between Bitcoin and a tulip bubble is it's very easy to grow a lot of tulips. Bitcoin, as we'll see, is a very, very scarce asset. Now, a lot of people don't realize in investing that if you do the safe thing and you invest in what everyone understands. So right now, Apple is obviously a great company. They make great products. Everyone loves them. But the real opportunity to make a lot of money in Apple is long, long gone. You have to invest in things that are ahead of the curve. Wayne Gretzky is famous for saying, how did he get so good? Well, he skates to where the puck is going to be rather than to where the puck is right now. So when you're investing and you're thinking about long-term investments, if you invest in the safe thing, you might make a little bit of money. Apple's probably a decent long-term investment. But to make the really big money, you have to be ahead of the curve and you have to invest in some really weird things. Now, I'm old enough to remember how controversial the internet was in the mid to late 90s. Here's a famous Newsweek article from 1995 talking about how the internet's going to fail, how it will never scale. Lots of articles, if you go back, you can see how people, lots of very smart economists, lots of smart technologists said, well, people are never going to shop online. It's very inconvenient. The internet will crash. It will never scale, etc. But for those who understood its potential, there was really just a gigantic amount of money to be made. And those who poo-pooed the internet really missed out. They missed out on Facebook and Apple and Google and Netflix and Amazon and all these companies. And you've probably heard people over the past 20 years, at least I have, saying that Amazon's in a bubble. The bubble's going to burst soon. The company doesn't make any money. People who say these things about Amazon don't know how to read an income statement, and they don't realize, or a cash flow statement, they don't realize how much Amazon was reinvesting its money so it wouldn't have to pay taxes on it. But this is where Bitcoin is. So if you're someone who missed out on internet stocks, you missed out on Google or Facebook or Apple, or Amazon, I would encourage you to take a look at Bitcoin. It's a risky investment. It might not work out, but it's weird enough and new enough and interesting enough technology to have some really, really big upside. And I think the best analogy for Bitcoin at this point is that it is digital gold. It's a store of value. Now, what exactly is a store of value? Well, a store of value is a place where you put your money if you want to preserve its purchasing power. So, for example, when I was a kid, a Big Mac was something like 40 or 50 cents in the early 70s. And now a Big Mac is $5, $6, $7, $8, depending where you are in the world. And so if you took that 50 cents and you stuck it under your mattress, or even if you put it in T-bills or a savings account, and you wanted to pass on your wealth, that 50 cents, to your future self or to your grandchildren and say, here's 50 cents, I want you to be able to buy a Big Mac whenever you want, that strategy failed simply because the US dollar and all fiat currencies, all paper money like the US dollar, the euro, the yen, the Australian dollar, Canadian dollar, these fiat currencies, they're not backed by anything. They're just paper. And they lose their purchasing power over time. In fact, they lose a lot of purchasing power over time. They lose probably, in the past, the US dollar's lost about 2% a year, probably losing a lot more than that now for reasons we'll see. But if you lose 2% a year, so you work really hard, you put your cash in a savings account, you don't want to invest in risky things, but it's naturally being eaten up by inflation and by central bank money printing. So if you're losing 2% a year on your savings, and you don't think you're losing 2% a year because maybe you're earning a little bit of interest income, but if you're losing 2% a year on your savings account, after 20 years, your wealth has gone down by 40% roughly, just 2% times 20 years. And so that's why you can't store money in a mattress. You can't even store it in a savings account. You won't keep up with inflation. And people are forced into riskier assets, unfortunately, because of this system. People are forced to buy real estate. This is why everyone tells you to invest in stocks, in your retirement account. And these strategies do work, but the problem is it's very nauseating having a lot of wealth in real estate or stocks, especially stocks. You've been watching them move up and down 50 or 100%. So this is what Bitcoin, this is the problem that Bitcoin solves. And it appears that it's beginning to function as a store of value. It's a very volatile store of value. It moves around even more than stocks. But if you wait for it not to be volatile, if you wait for it to no longer be volatile, it's going to be at a much higher price. In the same way that Amazon or Apple, when they were young IPOs, their stocks were incredibly valuable, incredibly volatile. Amazon would regularly go down 50, 60, 70, 80, 90%. And so now it doesn't move around quite as much. Something like Apple or Microsoft moves around even less. That's because the volatility's gone, the uncertainty's gone, the investment, the real returns have been made. And so if you're willing to, if you're going to own Bitcoin, you have to be willing to watch it move around a lot, or it's better not to watch it. But if you wait for it to become less volatile than it is now, you will miss out. So Bitcoin seems to be a good store of value, which is one of the functions of money. It is not yet a perfect medium of exchange. A medium of exchange just means I can take my US dollars and I can buy corn with them. I can buy a computer with them. They're accepted everywhere. Bitcoin is obviously not accepted everywhere. But I think in the coming years, it will be accepted by a lot more merchants. It'll be accepted online by Amazon. And Bitcoin is a lot like a stock. You can't go to the grocery store and buy groceries with your Apple stock. You first need to sell your Apple stock, convert it to US dollars, and spend it that way. Use it to buy groceries. Same way with gold. They don't accept gold at the grocery store or a lot of online stores. But you can always convert it to fiat money, to US dollars or euros, and then spend it that way. That's money as a medium of exchange, where people exchange goods using this intermediary product called money. I'm going to be talking about Bitcoin as a store of value, which I think is more fundamental than as a medium of exchange. So this is a way of passing on wealth, whether it's a small amount of wealth or a large amount of wealth, it doesn't matter. Passing on wealth to your descendants or even to your future self, because you don't want to have that 50 cents under your mattress, and then 20 years from now, you can only buy a tenth of a Big Mac hamburger instead of a full Big Mac hamburger. Now, why does the value of the US dollar continually go down? Well, it goes down because the Fed, which is the US central bank, is constantly printing more money, especially during a crisis like we're having now with this virus and the huge economic slowdown and recession. The Fed has to print a lot of money. But when the Fed prints more dollars, it devalues the dollars that are in your pocket, that are in your savings account. And it's a way that the government actually picks your pocket. And it's not just the US government, all the world governments print a lot of money. And they can print it because it doesn't cost them anything to print money. The US dollar and all the world currencies, the yen, the euro, etc., none of them, the renminbi, the yuan, none of them are backed by gold anymore. They're just paper. And the government can print as many of them as they want to. They can print dollars and use them to bail out hedge funds, to bail out big companies, or even to send you a check for $1,200 if you're in the US. But what they're doing is they're really devaluing your accumulated wealth by doing this. And this is why you need a store of value. You can look here, you can look at the Fed's balance sheet. Basically, they print money, they buy lots of stuff, and they buy securities like muni bonds, treasuries, even bond ETFs. You can see how the Fed's balance sheet has risen since the year 2000. It's just gone from under $1 trillion of assets being held on their balance sheet to close to $6 trillion. And a lot of that has just happened, you can see, since the beginning of 2020. Now, how do they pay for these assets? How do they get the money to buy these assets? Well, it's very easy. They just print it. This is just an unbelievable system we have here. A lot of people don't realize this is how it works, but this is how it works. They don't actually need your taxes. The amount of taxes collected do not cover government expenditures or everything that the Fed is buying. So they just print money. And this is why we need a store of value. The more money they print, the higher gold prices will go, and the higher Bitcoin prices will go as well. So who invented Bitcoin? I'll just do a brief amount of history here. Satoshi Nakamoto is the legendary creator of Bitcoin. He developed it in 2009. He published a white paper. We do not know who Satoshi Nakamoto is. He's sort of a legendary figure, like Perseus or Hercules at this point. He's obviously a guy who knew a lot about math, a lot about cryptography. He was a guy who very much understood economics. And one of his explicit reasons for coming out with Bitcoin is he did not like the bank bailouts of 2008 and 2009. And he actually mentions this when he releases Bitcoin. But Satoshi Nakamoto is anonymous. It could be a man, it could be a woman, it could be a bunch of people. So these are not actually pictures of him. No one knows who he is, which is probably a good thing, as we'll see, because Bitcoin is completely decentralized. There's no one you can exert pressure on. If Satoshi Nakamoto was really well known, perhaps the U.S. government could put him in jail and threaten to break his legs or something like that. But no one knows who Satoshi Nakamoto is. But one thing we do know is that he, she, or they is a very wealthy individual. So I should rewind and say, when Satoshi invented Bitcoin, he created a fixed supply. So they're only in the history of the world, from this point going forward, there are never going to be more than 21 million Bitcoins. And so Bitcoin is actually rarer than gold. There's a lot of gold deep in the earth. There's gold in outer space that Elon Musk and Jeff Bezos, they're trying to lasso comets and meteors and bring them home, asteroids. And so the ultimate supply of gold in the world is a quite rare precious metal, as you know, but it's not as rare as Bitcoin. Bitcoin is rare. It's built into the code, and there's nothing anyone can do about that. So there are only going to be 21 million Bitcoins ever made. This is why it functions as a store of value and as a form of digital gold. Now, to get back to Satoshi Nakamoto, one thing we do know about him is that he kept 1 million Bitcoins for himself. Now, these Bitcoins have never been sold. They've never been moved. But the interesting thing about them is they make Satoshi, whoever he, she, they is, one of the richest individuals or groups in the world. At current market prices, this 1 million Bitcoins is worth about $7.1 billion. And again, Satoshi probably sort of an academic type, not interested in spending this. He or she or they might be dead as well, but these Bitcoin have never moved. But this is there's been a huge amount of wealth creation here. So let's see. Bitcoins are mined. You've probably heard about Bitcoin mining. And the analogy is to like precious metal mining, like gold mining. But Bitcoin mining is all done on very special, high-speed, powerful computers. And what they do is they secure the network using cryptography, which is a whole branch of mathematics that I'm not going to go into here. But they basically solve these computational problems. And by doing that, it allows them to write to the blockchain, which is just a ledger of all the transactions that have ever happened in Bitcoin. Now, it requires energy to mine Bitcoin, but it's increasingly becoming a green form of energy. A lot of the Bitcoin miners are in rural areas where they can use hydroelectric power or sort of stranded energy, forms of energy to run these computers, because they obviously require a lot of electricity. So I would argue that Bitcoin is actually, it's a very green form of money. It's energy intensive, but it uses energy for the most part that's off the grid energy. And the other argument I would make is that anything good requires a lot of energy. So the internet uses a lot of energy, but we don't want to give up the internet. Cars and airplanes use a lot of energy. They do pollute the world a little too much, and we're going to try to move beyond that to electric cars. But civilization basically requires energy. And there's a lot of energy in the solar system, in the universe. So this is something not to worry about. But it's also important to realize that a lot of these Bitcoin miners are using green forms of energy. So Bitcoin miners, they create new Bitcoins, and they also process transactions on the Bitcoin network. You can get very technical with this. If you're a really technical person, I'd encourage you to dig deeper, but it's really beyond the purposes of this lecture. So then we run into the kind of common objections to Bitcoin. Can Bitcoin be shut down by the U.S. government? Can it be shut down by any government? And the answer to that is no. This is a map of all the Bitcoin nodes around the world, which are processing, which are part of the Bitcoin network. You can see that they're really concentrated in Europe and Asia and North America, which is really where the big cities are as well, and really kind of the centers of culture. But it's impossible for any government to shut down Bitcoin. Even if they got together and tried to ban it, they wouldn't have any luck because it's so decentralized. There's no one in control of Bitcoin. There's no central authority. There's no central bank. There's no head of a corporation. And so Bitcoin is a lot like one of the analogies I use is it's like marijuana. Marijuana has been illegal on and off around the world. It's never been stopped. And if anything, it's done very well as a black market thing. So it's basically impossible because Bitcoin is so decentralized. U.S. government can't shut it down. Theoretically, you could get all the big governments of the world to try to work together to shut it down. This seems unlikely because the world governments, they haven't even been able to cooperate on coronavirus. China and the U.S. Aren't working very well together right now. And, they can't even agree on various trade issues and travel issues. And so it seems unlikely that you'd be able to get everyone on board, combined with the fact that there's a lot of global resentment against the U.S. dollar and the way that the U.S. throws its weight around. And I can say that as a U.S. citizen. And so it's very unlikely that I think there are a lot of geopolitical actors who would actually like to see the U.S. dollar lose its power. And so it's very unlikely, even if everyone decided to ban Bitcoin, they still wouldn't be able to shut it down. It's very decentralized. You have satellites running it in space. You have remote cabins in various parts of the world running it. So it's really not something that can be shut down by any government. It can be banned. It can be made illegal like gold was in the U.S. in the 1930s. But gold just went underground. People did not turn over all their gold to the U.S. government when it was illegal from, call it, 1933 to 1971 or 73, or shortly after that. And so Bitcoin's a lot like gold or marijuana. You can ban it, but you're not going to be able to get rid of it. Now, the other critique I always hear is that Bitcoin can get hacked and it can get stolen. This happened with Mt. Gox, which was a cryptocurrency exchange in Japan, I believe. The answer to this is Bitcoin cannot be hacked. The only way it can be stolen is if you buy it on an exchange and you leave it there and you don't hold your private keys. If you hold your private keys and no one knows what they are, it's a little bit like a password to a website or an account. No one can steal it. If you think you can hack Bitcoin, or you know someone who can, I would encourage you to check out this website. I'll link to it in the description notes below. This basically shows you the top 100 Bitcoin addresses. Let's just look at number 4 right here. Here's the actual address. We can see this on the blockchain, and we know that the Bitcoin are there. Currently, there are about 94,000 Bitcoin there. They have a market value of 670 million. So this is how the math works. If you can get a really good hacker for me, I'm willing to split this with you. We'll each get paid 300 million. Your hacker will help me hack it. And if you think about it, $300 million, that buys some really smart people. That buys a whole team of really smart people. But it's mathematically impossible to hack Bitcoin. And if it were, these chunks of Bitcoin wouldn't just be sitting out there. Here's $1.8 billion worth of Bitcoin. Here's $1 billion worth of Bitcoin. And you can see that, if this were gold, if this were some sort of data, the hackers would be working really hard to get it. And hackers are working really hard to try to get this Bitcoin. But it's just out there. And even $500 million or $1 billion won't pay you enough to hire to get the processor speed or the computers or the hackers to do it. So Bitcoin cannot be hacked. The only way you can lose your Bitcoin is if you store it on an exchange, or you're stupid and you give your Bitcoin private keys to someone else. Now, the other critique I hear about Bitcoin is that, well, it can't be money because it's not backed by the government. But this really ignores one of the functions of money, which is both a store of value and a medium of exchange. So, for example, gold is not backed by any government. In fact, it's actively discouraged by big governments like the U.S. government. The U.S. government doesn't like gold at all, for obvious reasons, because they want you to use dollars. Nevertheless, gold is accepted all around the world. You can use gold to buy stuff in India. You can use gold to buy stuff in the U.S. People, right now, there's a huge run on gold. During the coronavirus times, people are trying to buy gold. So this is a good example of something that has value, that's a store of value, that's not backed by any government. And so you can have money that's not backed by government. For example, bags of cocaine are currency in various parts of the world. I'm certainly not encouraging anyone to break the law. Marijuana has been used for really since the hippie days as a form of sort of black market currency. So while we're at this, maybe I should address the other big elephant in the room. A lot of people, the reputation that Bitcoin has is it's just used by people for illegal activities. It's used by drug dealers. There used to be a website online called Silk Road where you could buy illegal drugs, and there is a percentage of Bitcoin that is used for illegal activities. But the one currency that's used the most worldwide for illegal activities is the $100 bill, the $100 US, $100 US bill. And this is accepted widely by drug dealers all around the world, by money launderers, etc. And so you can't really reject a currency simply because there are some bad people using it. Because there's some bad people using Japanese yen. There's some bad people using euros. But in my experience, most of the people who are interested in Bitcoin, they tend to be tech people. They're not terrorists, and they're not drug dealers. And I'm certainly neither of those things. And so you can have currency. You can have something that functions as a medium of exchange or as a store of value, even though it's not backed by any government. And the examples, we can give all these barter examples, and we can give the example of gold as well. Now, why is it an important time right now to be looking at Bitcoin? Well, there are two main reasons. The first one is that the central banks of the world, especially the Federal Reserve in the US, are printing a ton of money. They're devaluing the US dollar, which means Bitcoin and gold will benefit from this. Now, the second thing that's about to happen in May, it looks like May 13th of 2020, there's going to be something called the halving, which you may have read about. And what this means is that the reward for Bitcoin miners is going to be cut in half. And as a result, these Bitcoin miners are going to be producing half as much Bitcoin every day. So there's going to be kind of a software-induced shortage of Bitcoin. This happened in 2012, 2016. It's going to happen in 2020 now, 2024, 2028. And the normal pattern is that you get the halving, and then the following year you get a huge run-up in Bitcoin. So Bitcoin there was the halving in 2016. Bitcoin ran from, I want to say about $1,000 per Bitcoin in 2017 up to $20,000 per Bitcoin in 2017. And now we're having another halving coming in just 36 days roughly. And one way of thinking about this is, let's say you were interested in investing in gold, and I told you in 36 days that half the world's gold mines would be closing. A lot of them actually are closing because of coronavirus. But imagine if I said that. The amount of supply of gold coming onto the market is going to be cut in half. Half the gold mines are going to be closed in 30 days from now. Would you say that's bullish for gold or bearish for gold? It's obviously bullish, assuming that the demand for gold remains constant. If you have constant demand or increasing demand and a decreasing supply based on just basic economics, you get a shift up in prices. And something similar is happening now. People are rushing toward gold. They're rushing toward Bitcoin. And everyone is trying to find a way to preserve their wealth in the face of the money printer. So now is a really, really interesting time for Bitcoin. And it's one reason I'm so excited about it. Now, I don't know if Bitcoin runs in 2020. I think it does. I think it goes up for the rest of the year from 7,000. And I think we easily see 10, 12, 15,000 by the end of 2021. But I won't be selling any if that happens. This is what I'm holding out for. I'm holding out for 2 or 3 million per Bitcoin by 2028. There's no, I can't think of an investment that would have these kind of returns over that time period. So we've got the central bank money printing. We've got the Bitcoin halving coming. And so then the next question I always get when I talk about Bitcoin, especially on YouTube, is people ask me, should I buy Ethereum? Should I buy XRP? Should I buy Litecoin? Should I buy Bitcoin Cash? Should I buy Bitcoin BSV? And my answer, and again, not investment advice, I wouldn't touch any of these. Bitcoin is the next Bitcoin. Bitcoin is the original. It's the first mover. It has the network effects. And so I wouldn't waste my time with any of these other cryptos. A lot of them are not decentralized. They have a central vector of attack. And a lot of them don't have a fixed cap as well. They just have an unlimited supply that can be produced, especially by a group of insiders or a charismatic founder who can just basically print more money for himself, and then you're back to this guy who we want to avoid. Now, we talked about gold mines shutting down as an analogy for the halving. So then a lot of people say, well, I can't afford a Bitcoin because I don't have $7,000 to buy a Bitcoin. And this is why a lot of people are drawn to what people call altcoins like Ethereum and XRP and all this other garbage, because they think they can't afford a Bitcoin. Well, the good news about a Bitcoin is it's a very well-designed form of money. It's divisible. Each Bitcoin is divisible into 100 million smaller parts, sort of slices of a pie. And what this means is that if Bitcoin's currently trading at about 7,000, call it 71.45, you can buy a fraction of a Bitcoin. So if you buy 0.001 of a Bitcoin, that will cost just $7.14. Now, if this goes up 10x, as I would expect it to, by the end of 2021, you've turned this into $700 and call it $71. And then if it goes up another 10x, as I would expect, you've turned it into $710. And I think it actually, by 2030 or so, you're going to have $7,100. So a very small amount of money, the amount of money you might spend on a Big Mac meal at McDonald's, you're spending $7. But if this turns out to be right, your real opportunity cost is you're spending $71 for that burger, or $710 for that burger, or $7,100 for that burger. So the good news is that anyone probably anywhere in the world. Hesitate to say that, but because it's so divisible. I mean, you could add a zero to this and basically buy 71 cents worth of Bitcoin. So this is really open to everyone. And the good news about it is that this is a way for the little guy to make a lot of money. If Jeff Bezos or Bill Gates wanted to buy Bitcoin, they wouldn't be able to buy as much as they really need to move their net worth, simply because right now all the Bitcoin in the world are worth about, call it $125 billion. This is what we call the market cap of Bitcoin. And if Jeff Bezos or Bill Gates started buying a lot of Bitcoin, they would drive up the price. So if they want to do that, they're welcome to do it. There's a good chance that governments around the world have already started buying Bitcoin, central banks, and certainly a lot of politicians, a lot of investment bankers, a lot of U.S. billionaires, including people like Peter Thiel, who was the first outside investor in Facebook and founder of PayPal. He's been very bullish on Bitcoin. I don't know whether he still owns it, but he certainly used to own it in his funds. So this is the good thing about this is investment for the little guy, and you can turn a small amount of money into a really large amount of money. If you go back to these original numbers, turning $7,000 into $400,000 or $1 million or $3 million, just one Bitcoin or half a Bitcoin can, if this is correct, will be able to produce just tremendous amounts of wealth. I would encourage you, though, none of this is investment advice. You should follow Plan B on Twitter. He's an anonymous account, but a very smart quant who works at a company that manages over $100 billion worth of money. You should read his paper. Nothing I'm saying is really investment advice. Just telling you what I'm doing. I own a lot of Bitcoin for all these reasons that we've talked about. So let's say you want to dip your toes in the water. You'd like to buy some Bitcoin, knowing that you don't have to buy a whole Bitcoin. You can buy a fraction of a Bitcoin. Well, you need to go to basically a Bitcoin exchange or a crypto exchange. I like Coinbase the most of all the ones I've seen. Cash App is also good in the US, but they do charge higher fees. So what I did is I opened up an account with Coinbase. I asked them to upgrade me after I opened up an account to Coinbase Pro. And if you use Coinbase Pro, they have much lower fees and commissions. Now I should say here, I'm not affiliated with any of these companies. None of this is a commercial. I'm just a customer. I use Coinbase Pro. I'm not being paid by anyone to show these things. And Bitcoin is decentralized. There's no central Bitcoin company that's trying to pump this like a penny stock. It's completely decentralized. It's not controlled by anyone. And so I don't have any conflicts of interest, just so you know. So you open up an account, or I opened up an account with Coinbase. I upgrade to Coinbase Pro. And then when you get inside, you can see an interface that looks like this. And you move some money in from your bank. And it shows up in a couple days. You can either ACH it or wire it in. And then you can just buy some Bitcoin here. After you've done all your research, of course, non-investment advice. So you can buy $1 worth of Bitcoin. You can buy $10 worth of Bitcoin. You can buy $100 worth of Bitcoin. You can see here to buy $100 worth of Bitcoin, the fee is just 35 cents. And that will get me about 0.01389 Bitcoin. And so then you just hit place buy order and you own some Bitcoin here. Now, the main way Bitcoin has been stolen in the past is that people leave it on the exchange. Coinbase is probably safe. You can buy Bitcoin and hold it here, but you should know that if you don't hold your own private keys, you don't control the Bitcoin. And so if you buy it on Coinbase, they hold your private keys. And if Coinbase gets hacked, and they're definitely a honeypot, there's billions of dollars worth of Bitcoin just sitting there. If they get hacked, you can lose your Bitcoin and you have no legal recourse. So what I do is I buy my Bitcoin here. And you might ask, I've got 17,000 US dollars here. I've got 0.001 Bitcoin. Where are all my Bitcoin? Well, I don't hold them on an exchange. And so what you do after you buy, or what I do after I buy the Bitcoin here, I just click withdraw and I can pull the money off the exchange and then I hold it on a hardware wallet. There are a bunch of brands that I use. Probably my favorite, especially for beginners, is called Trezor, Trezor.io. I'll put this in the links below. Again, I'm not associated with Trezor. I don't know anyone who works there. They're not paying me for this. They're just very good for beginners. And so what you do is you follow the directions, you buy the Bitcoin on Coinbase, you withdraw it, and you hold it on a hardware wallet. and you'll be able to create a backup for your hardware wallet in case the actual, I'll show you what a hardware wallet looks like. You can see the picture here. They look like this, and they just plug into a USB port on your computer. Now, if your hardware wallet is stolen, there's a way to make it backup, where you basically create a series of words that serve as a backup. And so this is what I've done. And just so you guys know, I don't have these hardware wallets at my house, so please don't figure out where I live and come and find them, because they're not here. But this is the safe way to hold Bitcoin. You buy it on an exchange, but you don't keep it on an exchange, or it might get stolen like it did at Mt. Gox. You stick it on one of these hardware wallets, and then you forget about it. You keep it in a safe place, obviously, and there are different ways of doing that, which you can research more. But then you don't trade around it. At least I'm not going to trade around it. I'm going to hold it for the next. I'd probably consider selling some Bitcoin at about $2 million per Bitcoin. I'd start to unload my Bitcoin and maybe convert it into a little bit of real estate or something like that. But that is I don't think Bitcoin is something you really want to be trading. I don't think you can get better returns than the buy and hold would at this point. If you're trading in and out of it, you might miss some of the big up moves. Now, Bitcoin has a lot of tailwinds helping it out. Besides the May 2020 halving, which we've spoken about, besides all the central bank money printers, we have millennials are basically not interested in gold. Boomers are very interested in gold. Gen Xers, which I am to a certain extent, millennials have no interest in gold. They're interested in crypto. They're interested in Bitcoin. And so there's a generational thing happening here where people who want the functionality of gold and are under the age of, under the age of 40 or 50, they're going to be much more interested in Bitcoin. And there are a lot of millennials whom I've spoken with who just refuse to hold stocks. They just own crypto, especially Bitcoin. So it's got this tailwind, and it also has the tailwind of a lot of institutions, which are big companies that manage money for wealthy people or for universities, for endowments, etc. Institutions are very interested in Bitcoin. And you can find that out by listening to Plan B, who works for one of these very big institutions. You can read his paper. There will be institutional flows into Bitcoin. There already are, and they will just only increase. Because this is something that you can devote. I mean, one way to think about it is an individual. If you take 1% of your net worth and put it into Bitcoin. So let's say your net worth is $100, just to make it really easy. Let's say you take $1 and put it into Bitcoin, and it goes up 100x, as I expect. Well, now you have another $100. So you've basically doubled your net worth by just putting 1% into Bitcoin. If Bitcoin goes to zero, which it certainly can, this is a new technology. There were internet companies as well that went to zero. Amazon and Google obviously didn't. But if Bitcoin goes to zero and you've invested 1% of your net worth, what are you down? You're down 1%. You still have 99% of your net worth. So I think for these reasons, it's a very good insurance policy against the current financial system collapsing, and also an insurance policy against our wealth being constantly devalued by crazy central banks. And institutional investors realize this as well, that they can allocate just a small amount to Bitcoin, but these institutions manage trillions and trillions of dollars. So if they were to put 1% or 0.5% into Bitcoin, you're talking about more money than the current market cap of Bitcoin, the total value of all Bitcoin right now, which is about, call it 130 billion. And so you have these tailwinds, just like you had with the internet stocks, where there's big institutional money that comes in at a certain point. And you also have this generational shift where the Zoomers, Gen Z, and Millennials are much more interested in crypto and Bitcoin than they are in, certainly in gold. I don't know any Millennials who are interested in gold, and even more interested in Bitcoin than in stocks. So that's a basic introduction to Bitcoin. If you want to see how I'm trading it, I give access on my website. You can sign up for Trader University Premium, and you'll get to watch me buy Bitcoin and possibly other cryptos, and tell you what I'm thinking, how to move Bitcoin to a hardware wallet. So if this is something that interests you, if you have a lot of downtime now, if you're home from work because of the virus, I'd encourage you to check out all my courses. I've got courses on trading options, trading futures, trading stocks, as well as the Bitcoin course. So if this is something that interests you, check out the link below. If you just click Get It Now in the link below, it'll take you to this checkout page. Now, tuition is normally just $125 for 30 days access. But I want to give you a coupon because it's hard times right now. So if you click have a coupon code right there and you just type in YT, as in YouTube, YT99, click update, and that'll take $26 off the price. So you'll get access to all 13 of my courses, including the crypto Bitcoin one, for just $99 or no long-term contracts or anything like that. So you can watch all the courses and cancel before 30 days are up, and you won't be charged again. So hopefully you found this interesting and helpful. I think Bitcoin is one of those new technologies that everyone should really read up on, and then decide for themselves what the best thing to do is, because it's certainly not for everyone, but I imagine there are a lot of people that it is for. Let me know your questions and comments below. Hit that subscribe and like button if you haven't done already, and if you found this video helpful, and I'll see you in the next video.